Good morning, it's David. It is January the 12th, 2010, 8:39 Central Time, Dallas, Texas. We had a pretty good night. Let's take a look. Big mover here was the soybeans. We reversed. We were stopped out yesterday, but then reversed short, and we are profiting $1,378. Gold is holding at $3,000 on that one contract. The dollar, we are short 2, went up $469, and I just entered there is one trade that we take intraday, which is the Dow futures. We are just slightly down on that. The overall total net liquidation value 73,530, with approximately 4,400 of profit currently on the table. And just to show you the trades this week, there they all are, so you can take a look at what we did. And also, I've not been showing this, but I'm going to start the this is the account information. Net liquidation value is the same number that we just quoted. The numbers I want you to look at here are the margin numbers. Current initial margin 32,000, maintenance margin 25, overnight 45. So to explain this, we currently have let me look at this number here. Current available funds $41,000 right here. Buying power 48,000. It's a little complicated, but let's just look at the buying power. Current excess liquidity, those two numbers, it's the same number. What that means is, of the $73,000 that this account is worth if we closed everything, right now we could withdraw liquid 48,688 or buy more stuff. In other words, we're not using all of the money. So how much are we using? Well, we're using what they call margin. It's not the same as stock margin. This is futures margin, and it varies overnight. The margin goes up, it kind of varies. But if you look at these numbers between 32,000 and 45,000, that's the amount of money I've had to use to purchase these current contracts. So let's call it approximately 40,000. Interestingly, this number says 400,434. That is the amount of commodity futures I'm controlling. In other words, they're only taking about 10% of the money in order to control these commodities. So it's as if I'm using $400,000, which I'm not, but I've got that much kind of committed. Now remember, we place stop losses at approximately 2% of the portfolio, $2,000 or $3,000 per trade, depending on which portfolio. In other words, we will only lose on a $100,000 portfolio. We will only lose a maximum of $2,000. In my case, $3,000 per trade. I'm taking a slightly higher risk approach on this particular account. So we cut our losses, move on to the next trade, but we let our winners ride. So don't think of the 400,000 as that's the amount of risk. There's no way that could be lost in any one session, unless we make a mistake entering these stops. So we place these stops very carefully so that we are only risking a small amount per trade. And of course, the business we're in is to predict that a given trade will win, not lose. And we have a very good win ratio of over 60%. So you put all that together, that's how we make money. There's more of this on the website, but I just wanted to show you that account information. showing that we're only really using about $30,000 to $40,000 of real money. Thank you.